Welcome back, Hustle family.
family.
So today's episode is going to be on the top 10 misconceptions and myths that I get from potential home buyers and homeowners who are coming back to do a refi. There's a lot of misconceptions that could be harmful to future home buyers because if you don't know them, you could actually think they're true. A lot of fake news, and it can stop you from buying a house. And at this channel, we want to debunk that. We want to go through the myths. We want to show you how you can actually get a house. And our job is to help you. So we're going to go through that, break that down. And if you're new to my channel, my name is Mr. Marcelle, and I teach first-time home buyers and people who already own a house how buying a house can be simple, easy, and fun. So make sure you hit that subscribe button so you can stay up to date. So myth number one, you need 20% down. Now, I'm gonna repeat that just for dramatic emphasis. You must have 20% down. Have you ever heard that? Oh, to buy a house, you have to have 20% down. You know, like the sales people, that's how they say it. 20% down to buy a house. That's absolutely not true.
Easy for Gazi, it's a Wazi, it's a Woozy, it's a fairy dust.
For example, you can go FHA, Federal Housing Administration, going this type of loan product for only 3.5% down. Meaning that if you think you need to have 20% down, you're kidding yourself because you're saving this unnecessary money. Now, the reason why this became a myth or misconception is because when you have 20% down, you get avoid PMI or MIP. But to save 20% down of a $500,000 house is $100,000. That doesn't include closing costs. For some people, that's going to take them their whole life. Some people don't make $100,000 a year. So to save that much could take you a lot of time. And instead of needing that much, you can get the same house for a lot less and then always do a refinance when you own 20% of your house. This is a way to lower the barrier stopping you from entry. So a lot of people are waiting for this 20% when you don't have to wait for 20%. So this is another thing that happens. When you're waiting for 20%, let's say the house you have your eye on is $500,000. Now, let's estimate it's gonna take you 5 years. In those 5 years, you're trying to save the $100,000. Guess what? That house prices is going up. So now 5 years later, that same house is $600,000. What happens? Now you have to save more money to get that 20% versus you getting in at a lower entry point and buying the house, owning the house, and just riding the wave of the home equity, the house price is going up. Do you see the difference? That's why I tell a lot of people, speak with a lender, speak with a loan officer, speak with a broker. Let's see if you're ready to buy now because you might not need as much as you think. All right, enough of that. Myth number two, renting is cheaper than owning. That is also a very, very, very big misconception. Now, granted, it all depends on where you live. If you live in like a major city like we live in New York, you know rent prices are always going up, up, up. While if you buy a house, your mortgage in most cases are fixed, meaning a fixed rate, meaning your mortgage isn't going to increase based off the interest rate. If it increases, it will be because your insurance went up or property taxes. But you have a much better chance of getting either paying the same as someone renting or less, getting a mortgage. The harder part is to get the 3.5% because we know you don't need 20% down to buy a house. Now, myth number three or misconception number three, refinancing is always a good idea. That's just not true. Refinancing can be a great financial move, but it's not always the right choice because just because it's good for Joe doesn't mean it's good for you. It all depends on your interest rate, how much you're paying, your taxes. There's a lot of things that go into determining if a refinance makes sense. So, like I always say, speak with a licensed loan officer like me or her if you have more questions. Myth number four, you should always choose a 30-year fixed rate. Now, don't get me wrong, I love my 30-year fixed rate mortgage because it gives you enough time to spread off over the payments over a long enough period of time where it's not as dramatic as a 15-year. Because with a 15-year, you're paying a lot more every month. Now, it doesn't mean that that's the only option. we do have other options. I like that. Options. We have other options available for you. So a 30 years one, a 15 years, and there's other various mortgage terms that we can do, but you need to speak with a lender to see which one fits your scenario or your situation. Myth number 5, you can't get a mortgage with bad credit. This is just not true. I think really this is my personal opinion. Disclaimer. I feel like this was like one of the TransUnion, one of the 3 major credit bureaus was like, we're going to tell people you need to have perfect credit so they can't buy a house. We're going to stop them. Because if you think you need perfect credit, you're going to spend your time just fixing your credit. When FHA says we could go as low as $580 to get a 3.5 down payment. And if we want to go as low as a $500, you need to put down 10%. But 10% allows us to go as low as a 500 on your credit score, meaning you using your bad credit isn't an excuse anymore. Now, granted, the scores, your interest rate, your scores to have a direct correlation to the interest rate. So the better your score is, the better your interest rate. So if you have a 500 credit score, doesn't mean your interest rates are going to look pretty, but it doesn't mean that you can't get a house. Does it make sense? So you have to weigh it. Sometimes I tell my clients like, hey, no, we're going to get in credit repair because you don't have much money and you're worried about the interest rate or your payments. And some of my clients have a lot of money and they're like, yo, Malcolm, I'll fix my credit later. I want to buy a house right now. Okay, let's go. We can move forward. So this is only part 1. This is a 2-part series. So remember this. This is only part 1 of the video series. But if you want a sneak peek about some more of the possible myths or misconceptions, please just click this video right here. The video is called How to Qualify for a Mortgage Like a Pro. This video is really good. So I'll see you over in the next video, and make sure you hit the subscribe button and the little alert.